Welcome everyone back to the Price Action Labs YouTube channel. And so in this video, I'm going to be going over a quick case study on the ES futures on the 15-minute time frame and 1 minute for execution. Now, I'm going to be diving into quite a lot of detail into absorption specifically. And so this video isn't for beginner traders who are trying to get into order flow or just beginner traders in general. This video is going to specifically target those who understand the concept of absorption, right? So absorption stands for footprint charts. And so I have been revamping a lot of the way that I teach and a lot of the way that I actually trade myself to try and get more precision and more frameworks out to you guys. And so I'm going to be introducing that framework later on in the video, so pay attention to that, right? So we're just going to kick things off with, of course, going in the Discord, and I'm going to be answering people's questions when it comes to basically using this video to answer people's questions, but also break down a trade that I took on ES futures. So here what we can see here is the trade basically was from this key level down to roughly this area here, closed for about 1R, right? We had a bit of chop over here. But nevertheless, right, we're going to be breaking down how I took this trade. And so this trade comes down to what I call the one phase manipulation model. And so what do I mean by the one phase manipulation model? So market opened here. So I'm just going to take the charts back to before market open, right? So I had a key level over here. Again, key level. You want to have your key level marked out before the session even begins. So this was my key level on ES, so 68.35 to 68.25, let's say, 25 to 35, 68.25 to 35. This was my key level. And so what I often say is the best traders who have the least amount of FOMO, who have the best kind of psychology, are the most structured. And so your poor psychology can be fixed with better positioning and better frameworks. And so I'm going to introduce you to my overall framework that I use to trade, right? So the premium footprint execution process. So it comes down to the 4 P's. So positioning is the first P. So where you position your trade is very important. And so I have a separate setup just for that. But for the purpose of this video, I'm just going to be breaking down that it exists, right? So the positioning is very important. Where you take your trade is more important than how you take the trade or why you take the trade or what time you take the trade, right? These are all sub variables. And so this is why I have the premium footprint execution process. This is the first P. Notice how all 4 P's kind of form a puzzle, because that's what it is, right? So you need to know what order to put the puzzle in, or in other words, what order do you approach the actual trade itself? And so you don't, people often go for a precise entry or they want that precision entry, but they struggle with positioning. So positioning is where you want to kind of focus on first, right? So this was your positioning between 68.27 and 37, basically 68.27 to 37. Now, once you have that, we're going to go over the one phase manipulation model. So it looks something like this. So once you have Asia that prints like this, Asia prints obviously liquidity, and then of course London or New York sweeps that liquidity, right? This is the one phase manipulation model. Now the reason I call it a one phase manipulation model is because Asia has 2 sides of liquidity. We have buy side and we have sell side. And so if we only take out buy side, we've only taken out one side of the liquidity, and so the trade was basically targeting the next side of liquidity. So for those who trade kind of forex or futures or even crypto or gold, you will know how reactive price is to the highs and lows. Sorry, the Asian highs and lows. And that's basically how this trade played out. So if you just take a look at this trade specifically, it was literally what I call a phase 1 manipulation model. So it's a phase 1 manipulation model. So it's a phase 1 manipulation model because we've only taken out one side of Asia. We've only taken out that high. Therefore, we want to be targeting that low, right? So it's not a coincidence that we swept that low and this level still gave us good reactions, right? So look at that. Look at the precision in which the market wants to take the Asian high and low. So understanding where that Asian high and low is, and more importantly, understanding where you are in that cycle is super valuable, I think. So I've called this the phase 1 manipulation model for that reason. So you're looking for the buy side liquidity to be swept, and then you want to go and ultimately target the sell side. So that's kind of how the manipulation models work, right? So going into the actual session, what was my pre-market plan? So my pre-market plan involved this level over here, right? So we could either break above or break below. And so my bias was a break below. And that was to, like I said, target the Asian range low, right? That's what it is, right? That's basically the entire setup. So we're going to be breaking that down. more specifically. So now if we go to the Discord, let's break things down a little bit more. So now from here, pre-market still, what do you see in the circles? And so this is where we're going to be going into absorption and more specifically how to trade price action, right? How to actually read price action. So going back to my framework over here, once we have good positioning, you then want to go and read price. So once you positioned yourself in the market, once you've got your key level, you then want to move on to price. And so for price, I have made the, here we go, the real-time reading blueprint, right? So the real-time reading blueprint. The reason I call it the real-time reading blueprint is because the only time frame that matters is the now time frame. So it's not the 1 minute, the 3 minute, the 5 minute. You want to be focusing on what's going on in the now, and everything outside of that is irrelevant, right? So you want to be reading what's going on in the now. And so this screenshot was taken at, this was pre-market, so 14:20 or 9:20 Eastern time. So before 9:30 Eastern, you see price in this level. So we've started with positioning. Now we've moved on to the second P. This is the second, well, there we go. So this is the second P over here, price. How do we read price? So reading price specifically comes down to the real-time reading blueprint. So what does read stand for? So read the bid and ask, evaluate the delta, assess the aggression, and detect the zeros. So these are the only 4 things you need to read price successfully. Anything outside of that is irrelevant. So what we're seeing here, well, I'm just going to speed this up. So we're going to assess aggression, and then we're going to detect zeros. So what I mean by assess detection, right? What do you see in the circles? So I'm going to focus on this because this is quite a fascinating piece of the market. So we have a red candle. So a red candle by definition means that, of course, the close of the candle is below the open, right? That's the definition of a red candle. But what you want to understand is inside of a red candle, you can have a ton of buy orders. And so this is what separates those who try and guess the markets from those who try and read and react them. So you can either guess or gamble or read and react. And this reading blueprint here is the difference, right? So what you want to focus on is the real-time reading blueprint. So what we're doing is we're evaluating delta. So we've read the bid and ask, right? We're evaluating delta, then we're assessing aggression, right? So that's REA. So when we assess aggression, what we're really assessing is the color of the delta inside of the candles. This is very, very, very important to understand. Your key levels will not mean anything unless you can read the price action behind them. So much so that I've even labeled it out for you. READ. Read the bid and ask, evaluate the delta, assess the aggression, and detect the zeros. What do I mean by detect zeros? So what we can see here is, I know the writing is faint, but it's 0, 0, 0, 0, 0. We see a lot of zeros up here. So when you detect zeros, what that means is these are what we call finished auctions, and so the market has finished trading at those prices, at those levels. And so when the market has finished trading at those levels and they print a 0, this strongly indicates a reversal in the opposite direction. Right, that's one way to look at it. The other way to look at it is to think, okay, there are a ton of buy orders here. There's 0 aggressive sellers, 0 aggressive sellers, 0 aggressive sellers. There are only aggressive buy orders. But what happens when the market opens? This, right? So this is what I mean by the reading the real time. So the real time reading blueprint. So being able to read in real time will give you a significant advantage over what you were already doing, right? I'll repeat that again. Reading the real time order flow will give you a massive advantage over those who don't. And so this is probably my most favorite candle in the whole of the session, and this candle here set the tone for the entire session. We had our key level, and now we've read the order flow specifically. So again, read is the bid and ask, evaluate the delta, assess aggression, and detect zeros. So let's take a look at A and D. Assess aggression and detect zeros. So we detected a 0 here, right? So we had a ton of aggression, and we detected a 0 over here. And so this here signifies that buyers were really aggressive and they failed because we had this big red candle to the downside. Massive selling volume at 9:31 Eastern. Right, so this is this is sort of the second step in the process, right? So we've done our positioning, we've read price, now we're going to move on to proof. And so proof leads to the confirmation, right? So this is big word that gets thrown around in the space. What was your confirmation? How did you get confirmation? What was your confirmation? So confirmation, confirmation realistically, comes down to a few basic things, right? So when we come into a key level like this, we can either go long or short, right? Those are the only two options that we have. How do you know whether to go long or short? Well, it comes down to reading the market proof, right? Reading the order flow, then understanding the evidence that the market gives you, or in other words, the proof. So how do we do that? So I've had a framework for this as well. So this is reading the market proof, and so it will look like this. So I've called it the trap framework. So think of trapped as trapped reactions at price. So you're looking for trapped traders who get rejected, absorbed, and then we see a shift in pressure or a pressure shift. That's trapped traders. So you basically want to be trading in the opposite direction to those who are trapped. Now, if that sounds complicated, I'll break it down one more time. So basically, in this key level, right, who was trapped in this key level here? Well, the buyers were trapped, right? Because we had this huge downside move, which means the buyers were trapped. And so when the buyers are trapped, you want to be trading in the opposite direction to where buyers want to push price. Obviously, buyers want to push price up, but if they get trapped, that means that you want to be selling. That's how simple order flow is when you can wrap your head around it. You kind of want to look for the opposite to fail and then do the opposite. So you want to look for buyers to fail and then do the opposite of buying, which is selling. Basically, that's how order flow works in a nutshell. And so I use the trapped framework to get me there. So trapped in simple terms can stand for trapped reactions at price. There are tons of buying orders here. They were all unsuccessful. They were all trapped, and so that's why shorts eventually became the play. Right, so that's sort of the trap framework. And the final thing is this, right? Final thing is precision. So how do you get a precise entry, right? That's probably the most wanted thing. And so my entry today on ES was 68.20, 68.21, 68.20. So as you can see here, my entries came. This was my first sort of entry, and then I basically sized into the trade here at 68.20. Basically, 68.20 was my entries. So stops, so this was not a very well managed trade. I was risking close to 700, or I would have trailed the stop down to here. So probably about 500 risk. And I was only able to capitalize on, as you can see here, I was only able to capitalize on 578, right? So you want to look at that and think, well, it wasn't the best trade risk reward. It's probably about 1R, right? The reason why is because I exited early, right? Whenever I see chop in recent market conditions, if you've been trading ES and NQ, you'll understand why that is, right? But besides the point, what you want to focus on is how do you enter with precision. And so how I do that is like this, right? Or how I did that is like this. So I will, in this case, I was looking for a 5 minute. The 5 minute opening range breakout was pretty compelling to me. So the first 5 minutes printed like this. This is 9:30 to 9:35 right here. No, sorry, 9:30 to 9:35. And so throughout this entire process, right, there were a ton of trapped buyers, right? I'm going to show you what I mean by that, right? Again, trapped is trapped reactions at that price. So there we go. Let's break this down. So here was the first sort of, no, not this one. Yeah, here was the first 5 minutes. And so if you look at the first 5 minutes, who is trapped? Ask yourself, who is trapped, right? So trapped literally stands for TRAP, trapped reactions at price. So at this price, so 68, I think it was 68.27 to 37. Here we have a lot of the sell orders, a lot of the buy orders, a lot of the buy orders, right? Blue delta, positive delta, but they were not rewarded, right? Again, just like here, trapped buyers, right? So what we can see is trapped buyers break below the level. Trapped buyers, again, huge break below the level. So you want to look at that and start thinking, okay, this is the framework we want to think about, right? So when we look at it from a execution standpoint, to get that precise entry, I use the Bolt breakout blueprint. So the Bolt breakout blueprint, you can only use this if you understand order flow. And I'll explain to you why. Because you have the break, right? So let's do this in the 4 steps. So we have let's take a look at it this way. So you have the 5 minute opening range, you had the break, you had the retest here. There was my initial entry, and then I sized up over here. Let's take a look at this entry. So we had break, optimal retest, liquidity absorption, right? So break, retest, liquidity absorption. So what does that mean, right? Liquidity absorption is basically, let's just take a look at this. So break, retest. There is the liquidity absorption. So break, optimal retest, liquidity absorption. These two often happen at the same time, right? Liquidity absorption, right? So Here is a ton of buying orders that were unable to break above that level, right? This level here, 68.37. Right? Look at that. 1, 2, 3. We saw zeros. We saw a ton of buyers. Again, look at that. It's a red candle, but there's a huge amount of buying activity. And we just melt, right? We melt to the downside. So it shows us this is an area of supply. Trapped buyers or buyers were being absorbed, which means sellers were in control. So you want to think of your breakouts, because most trading strategy that are price action based does come down to some kind of breakout, right? That's just the nature of most price action traders. You're trying to trade some kind of breakout. And so the easiest way to trade breakouts consistently is to use what I call the bolt breakout blueprint. So you want to wait for the level to break. You want an optimal retest. So there's ways that we optimize different types of retests, very important. You then want to look for a liquidity absorption, right? So a lot of people, they pull the trigger without doing any of these three, right? Or what they'll do is they'll only wait for one break. They won't wait for a retest. And those who wait for a retest won't actually wait for an absorption, right? So absorption looks like this. So this is the candles, and this is the absorption, right here. This is the L. This is the liquidity absorption. And then the final thing to focus on is once you've seen all that, you can then pull the trigger. So the bolt breakout blueprint, just something to remember. And so that's how you get a precise entry. And so the precision entry that you're looking for comes at the end. So positioning, 4-step process for that. Read price based off the order flow. So how do we read price? There's a very specific way to do it, right? We want to be reading price with the real-time blueprint method, or the real-time reading blueprint. You want to read the bid and ask, evaluate the delta, assess aggression, and then detect zeros, right? And once you've done that, you then want to see who is trapped. So, use the trap framework, and then you enter with precision. That's how I do it. And so this trade, if we go back to the charts now, the trade itself did play out with some good level of precision. So if I just break this down, here was my short entry here, just about 68.20 area stops above here. Well, initially here, and I trailed them down to about here. And my exit was only about 1R, just over 1R. However, just at the start of my video, what did we discuss? Price took out the Asian high, the Asian low was left intact, right? Look at that. The Asian low, if I do that neater, Asian low was left for the taking, right? Look at that. So it's a classic, some people call it daily cycle, some people call it AMD. There's lots of different names for it, but this was ultimately the trajectory of the trade, right? So we had our, there we go. And so that was the entire trade using key level, entry, and order flow.